While everyone's sitting down, good afternoon, everybody. Welcome to this panel. ESG starts with exploration. We're really going to be talking about who is doing what well in the junior space. And I have the pleasure of introducing our panel today, full of experience and diverse insights into this topic. So bringing the investor perspective, we have Amanda van Dyke, who's Managing Director of Arch Emerging Markets Partners, and also Roulston from Managing Director of WestBay Capital Advisors. Trevor here is Chief Executive of Lynx Global Intelligence, which provides ESG data gathering software. And from the company perspective, we have Tim Dobson, CEO of Magnetite Mines, who has an iron ore project in South Australia, and Dominic, Head of Corporate Affairs with Adriatic Metals, who have a silver project in Bosnia-Herzegovina and a zinc project in Serbia. Great. Well, I'd like to kick off the discussion today with a question for you, Amanda. We know that ESG is receiving a lot of attention. There's a lot of noise. A lot of companies want to say a lot of things about ESG. So as an investor, how do you cut through that noise to identify projects that have genuine ESG credentials? And what advice can you offer to juniors who are developing their strategies and disclosures?
Thank you. The first thing I think I'd like to say a priori is that ESG is a bit of a misnomer. We use it very often like ESG, like it's a thing. But the truth is ESG is a very complicated topic. Environmental, social, and governance issues are all very, very separate. And what environmental, social, and governance means for every single project and at every single stage of development is very, very different. And as an investor, we have to invest the same amount of time and money and understanding into doing due diligence on ESG on every project we look into. And that's how we approach it, that we will do the same level of due diligence there that we do on everything else, because we know that whatever the ESG solution is, it's going to be separate. It's going to be different. It's going to be a customized solution. Every ESG plan is separate. And I think in terms of advice that I would give to juniors, because they are the future minerals that are going to power the energy transition mostly are not going to come from mines that already exist today. They're going to come from the mines that come out of the exploration that's happening now. And I would say remember that. Remember that E, S, and G are all separate, and that every single person in your company needs to understand that ESG and sustainability needs to be incorporated into the DNA of your company. Remember it in your job, whether you're, the company secretary or the geologist on site doing the initial exploration. You need to consider sustainability and just ask yourself the question: is this the sustainable way to be doing what I'm doing? And also remember that what you do in exploration is going to be very, very important. The people who do exploration are often the first people the local community sees and meets. And you need to be very careful to manage their expectations. We all know the exploration and development process is long. You need to be really realistic about managing those those expectations and say, we're here to explore. We're hoping that one day we'll find enough resource to be able to build a mine here. You have to be good corporate citizens and develop a good but fair relationship with the community and governments where you're working, because the baseline you lay in the exploration stage is going to play a huge role in whether or not that mine ever gets to be developed in the long term.
Thanks. I think you're right. There is a real need for setting a good base ground level at that point of an exploration so that you've got a good foundation to build from. Lawrence, I just wanted to draw from your experience. What do you see, where do you see juniors succeeding or falling short in terms of really communicating and delivering on those commitments?
Well, first comment I would make is I agree totally with Amanda, and take it one step further. If you've got to, as an investor, look at a company and start evaluating whether or not they're following good ESG principles, that's probably a yellow flag right off the start. To me, all of the ESG stuff, or whatever acronyms we want to use at any moment in time, it really comes down to doing the right thing. And if a company has to question and if you have to dig into whether they're doing the right thing, then you've got to take that into account. In terms of what the junior sector is doing now, there's a lot more communication than there is delivering on ESG, is my sense of it. I mean, everybody now has got their little section on the website and all that sort of stuff, but it really comes down to doing the right thing. And again, picking up on Amanda's point about, the explorers being the first into a community, and even beyond that, my observation is most companies will go through the steps of getting the appropriate permits, etc. But that's not enough. And whether it's BC or Ontario or Peru, if you're dealing in indigenous territory, you've got to remember these people were living there for, in many cases, thousands of years. It's their home. And whether or not there's a treaty or whatever regulations override, their traditional rights, that's not the point. They still see it as their home. And if you go in there and you do nothing more than sort of jump through the hoops to get your government approvals, I think you're already off base. And you've got to go in with the mindset that this is their home. And you've got to go in and immediately engage with them and get on the right side of them and respect the fact that this is their home and they have rights, whatever the legal framework is at that moment in time. So I think the juniors really fall down on that in not engaging soon enough and waiting until there's a conflict over some issue in a permit process to really begin to acknowledge and respect the traditional rights of the indigenous peoples.
Thanks. And one other topic that I think has been a thread throughout the sessions that we've heard today is about the standards and about the complexity of the standards and the ever-increasing number of standards, and that's a real challenge for the industry, and everybody is recognizing that. And it takes a lot of resources to address these standards. They are a high bar, and it's a real challenge. And I think actually in the junior space, the resources are less than for major mining companies. So Tim and Dominic, I just want your feedback on how do you really prioritize and respond to these high expectations, given that you are exploration development companies with limited resources?
Well, I think to immediately point out and to echo what Amanda and Lynx have said, a lot of it is actually around doing the best to your abilities as you can at the stage of the development cycle. Yes, starting at the very front end and setting that sort of DNA within the company, but also just accepting you've got limited capital to expend. You've got to actually develop your resource, otherwise you're not going anywhere. And therefore, in terms of the advice I'd give, we are now in development. We're halfway through. We'll be in production next year. I think the advice I would be giving to a junior is exactly that. Do the best you can to the abilities you've got. And when it comes to the regulatory standards, it is terrifying, quite frankly, to sit there at that point of a company's journey. You're short of staff. You're short of capital, everyone is doing 2 or 3 jobs, and then you're faced with this enormous regulatory alphabet soup of codes and standards. We all understand the direction of travel. None of us disagree with where this is heading, the requirements of the investment community or your host government, whatever else it would be, but it is absolutely a challenge to a junior to try and think which standards would you adopt, why would you adopt them, which ones do you need to? And what we ended up doing was actually taking rather a bespoke approach to this, where we sort of reversed engineered it. And we actually looked back at the expectations of our 2 largest stakeholders, which are the community and the environment that hosts our project. Because ultimately, on the statutory view, government's issued us a permit to operate the mine. The government's not going to take that permit off us. It very rarely happens that there's a statutory intervention where a mine loses a permit from a government action. It is the fact that the company has lost its community or lost its environment, and that is where things snowball and you lose your project. So we actually sort of looked backwards at what were the community expectations, what was required, and we actually from that then took a rather bespoke strategy at the start of actually just reporting the most meaningful to our stakeholders, which weren't at the front end, our financiers, and they weren't at the front end, actually even the host government. And so to that point, now actually a lot of what we talk about is or a lot of the way we report and explain our activity to our host community is through the UN sustainability goals, which aren't actually one that always feature in the rhetoric of the mining companies, but they are the ones that are better understood in the wider community, in the wider audience. I think, we also tried not to just take a simply compliance-based one, because I don't think that's the right approach either. In the end, going back to Amanda's point about the governance side, we all have to fulfill whatever compliance is required, but that's a sort of given. We need to do that. So we actually tried to say, look more at what were the expectations of our host community environment and centre it in that way. And what we've now found as we've gone through into drawing down on finance, having the EBRD, for example, on our registry, that reflected very well in their ability to come and join the company. Now we're in a different position. We are growing. We have got more assets to allocate to this. And every single one of us is determined somehow that we end up with a commonality of reporting in the industry. How on earth we're ever going to get there, no one yet has identified. But I'm hoping that the groundswell is heading that way. Someone this morning came up with 120 different standards that they thought they could apply to a mining project. So relax, take a deep breath, do it to the best of your abilities with the resources you've got available at the time, and remember that actually it is not a compliance-led tick exercise. It is actually based around your key stakeholders, which in this conversation are your community and your environment, not the government and not the financiers.
Thanks.
And that will come, would be my advice.
Tim, let's hear from you.
Yeah, thanks, Emily. When I look back at my career of 35 years in the mining industry across very large international projects right down through juniors, the concepts of ESG are certainly not new. The term triple bottom line was coined in the 1980s when I was still in university, and that referred to the economic bottom line being as important as the social performance of a company and its environmental performance. So when we think about ESG, it's exactly the same thing. This is the 1980s. It's been rebranded several times. We've heard corporate social responsibility being around. The term sustainability, I think it was 1993, a Canadian company I was working for, had its first vice president of sustainability. So these concepts have been there. When it comes to the standards, the biggest shift that I've noticed in the last 10 to 15 years is that it's being now imposed from supply chain management. Downstream end users of the metals that we're producing are now going way upstream to the source, to the dirt in the ground. And my feeling is that the regulations and standards that will stand out and be adopted won't actually be set by the mining industry. It'll be set by the downstream supply chain demands that are commanding what they need to see in their entire supply chain networks. It's very confusing at the moment because it seems to have ballooned out, as we've just talked about, but I suspect that the largest manufacturing and global suppliers will dictate the standards by which companies will have to abide by.
I'd agree with that. Trevor, how are you seeing companies respond in this space?
Sure. I'll highlight some of our clients' activities, which are a little biased and selfish, but I think that, we've seen some outstanding behavior in terms of taking onus of your data management. So one thing that we see is a really great ethos around ESG, but when we look at the nuts and bolts and the ball bearings, we're seeing a lot of spreadsheets and notebooks, and we're not really organizing that data in a cogent way that's appropriate for digital transformation and mining in what's almost 2023. So we see some great achievements in terms of starting to organize that data. I really feel Dominic's point that it is a nightmare in terms of the alphabet soup. I think the companies that are doing the best are selective. They pick a few standards that are relevant, that they know in the future are going to be applicable. You don't have to do all 120, probably 2 or 3 is good, but definitely within the modalities too. So there's great work in water, great work in tailings, and the different areas too. But at Lynx, we're really trying to support this effort by being pragmatic and site level about our data aggregation and how we visualize and share that.
Thanks. Tim, I just want to come back to you. You talked about that experience crossing over with the majors and the junior space. How do you see, what differences are you seeing between those two groups in terms of how ESG pressures and opportunities are being approached?
In the large space where companies, particularly multinational companies, are operating in different jurisdictions around the world, there is absolutely no place to not have the strongest possible ESG resources in-house and a compliance focus with all of the standards in place. You come down through the spectrum through development companies and back to juniors, which is the bottom of the pyramid of our resources sector, has a very wide base. There are hundreds of junior companies and there are different types of junior companies. there will always be a group of juniors that are very small capped, focused on drilling. They have a full retail shareholder base that's only interested in the next drill result being announced. And for those companies with limited shareholder funds to apply anything really to an ESG focus is really beyond the expectations of their shareholders. Having said that, what I have noticed over my career is that the companies that do well in that have a leadership that's committed to it and sets the culture from the top down. And I think if you're an investor looking at a junior, you want to convince yourself that that junior has the right type of ESG credentials to move into a larger scale company. I'd look for two things. One would be their transparency of their reporting on and the quality of it and the authenticity of it. And secondly, look at the leadership and what that leadership has applied in terms of resourcing that junior company for a good ESG outcome. So have a look at their organisational chart. Do they actually have sustainability, environmental compliance people in-house, or is it being farmed out to a consultant to get the report right for the end of the year? So they're the two things that I would look for in the juniors.
Mm-hmm. And I'd like to now return to your point, Amanda, about the importance of exploration of building those foundations, and fundamentally stakeholder engagement is something that can't start early enough. And building those positive relationships really sets the bar for all future engagements and development, and is so critically important. Lawrence or Amanda, do you have examples that you can share that you've seen of juniors which really have engaged successfully with those local communities? Maybe the Indigenous groups as well, if there's examples there.
I can use one of my own examples because that we've invested in that I can speak knowledgeably about. I think that far more juniors do a really good job engaging with their local communities than potentially get credit for it. Equally, some of them just completely ignore it, and they will not reap the rewards later on. But for example, Evolution, a company we're invested in, is finalizing its FEED and its DFS right now, and hopefully will go into construction sometime next year. But they've been working on their social license to operate in Chilalo on that site for over 7 years. And it starts slowly with interactions. And you have to be really honest about, we're drilling, we'd like to find a mine, we might find a mine. You need to be honest about where you're going. And I think that you can, one of the things about looking at mining companies or junior mining companies is they will all tell you what an amazing job they're doing at ESG and how much their community loves them. One of the best tricks in the world is go find whatever the closest local newspaper is and Google it. Google Translate will translate any language in the world these days, and half the time they're in English. And see if there's anything that says the name of the actual project in it and how often it comes up. Companies that have a good social license to operate, you'll see pictures of people from the company engaging in the local community in local affairs, right? You'll see it very often. Whereas one of the red flags for me is when I see a CEO sit down in front of me and tell me a priori, we have an incredible ESG profile. I'm like, really? And they're like, I do this really well. And I'm like, well, what about everything else? No, I do this really well, as in, we don't have a tailings dam, therefore we're going to be the cleanest XYZ mine in the world. And I'm like, being humble about ESG is the first hint that you understand that sustainability is a process. I'd much rather you say, we take ESG seriously and we're working very hard on it. That is a reasonable statement for a company to make.
One example of not being good on the S part of ESG, a company that I won't name them, but they thought they had good relations with the Indigenous group, but they didn't go the extra mile, and they didn't respect them is what it came down to at the end of the day. And when it came time for the government to grant the permits, of course the Indigenous group has input on the permits, they lost 2 years of work just because they didn't go through that step of respecting the Indigenous people. And the same group of Indigenous people, two companies that I am invested in, Mountain Boy and Enduro, made the effort. They go out of their way. The CEO will go to the village and sit down with the elders and interact with all the people. Their permits come through almost immediately with not just no comment, but very supportive input from the local people. So it makes a huge difference. Now, another thing, if I could just slip in a quick point here, a lot of the focus here has been on E, of course, which is not that important to juniors. The S is very, very important, but the G is also incredibly important, and I think it's largely overlooked in the world of junior companies. So many of the companies I look at, you've got a CEO and a group of trained teddy bears as directors, and you don't get that clash of ideas and cultures, and the CEO kind of push things through. And I don't know if the directors of some of those companies realize the disservice they're doing to shareholders and the risk they're putting themselves into of not exercising the responsibility and the control of making sure the company has good governance. And good governance is not just all the accounting records, but the whole business of having an audit committee and a compensation committee and an ESG, somebody that actually on the board of directors is overseeing all these things and making sure there is compliance and there is a discussion of strategy rather than just the CEO just pushing it through and everyone else just sort of signing their DocuSigns without reading them.
I think you make a really important point there, Lawrence, and I think let's take the opportunity to speak to Tim and Dominic about their approaches to governance, because it is part of that foundation that we're talking about. So yeah, please, both of you, I'd love to hear your thoughts on approaches and activities in that governance space.
Lawrence has actually already said some of the things I was going to do, but again, coming back to, we're going through this as a company, so I'm going to sort of talk to the practical aspects of it, and I'm going to go back to my thing for the junior at the start of the journey, and what advice I would give looking back from the fortunate position we're in as now a developer, is again, do what you can do to the best of your abilities with what you've got available. And some of these things they don't have to cost a lot of money. So if you pull back to the governance point, to Lawrence's point, I completely agree. It is not just about statutory governance and compliance and achieving regulatory. It is actually about it's the governance. It is the behaviour of your team. It is the set from the top, from the CEO down. Amanda came up with an acid test to look at the local paper. I'll give you another acid test that you could put in place. Is if a CEO of a junior, when he's out on the road promoting his company, if he could take that same presentation and give it to his local community and not be horrified actually with what he's just said and the word he used, then I think he's probably failing a governance test of the highest order at that stage. Going back to the board, we all require a board. Statutory, you have to have that board. Pick your board carefully. It doesn't all need to be the mining executives that have previously built mines. Start to consider a wider board representation to help you with the governance. Other things that are free, set up your public liaison committee or whatever we want to call it. These are things that don't cost capital. And they're part actually of the more overarching aspect of governance, of regulating the way you think. Commitments registers. Actually, the reality, we look at a commitments register and you think, oh my God, do I have to fill this thing in? Look back on your commitments register, CEO of the junior company, and look at what you said 6 months ago. Did you actually do that? No, you probably didn't. Learn that lesson. And these are three. I'm trying to come up with the sort of things that don't cost a fortune. And so I think that's what I would say towards the governance is within the abilities you've got available to do the best that you can. And Amanda was completely right at the start. That first initial interaction from that first geo on the ground, you can set the tone for that. And that is, that would be my principal advice on the early stage of take every opportunity that's available, and they don't have to cost money. You can do it. And in so doing, you will start to create, as your team gets bigger, a sort of DNA within the team that is doing the right thing and thinking the right way.
Thanks.
When I look at companies, and the first thing I look at is does the company have a stated set of core values, and then I look at the behaviours of the people working for the company and try to determine if they are real core values or not, or whether they're just written on the board to tick some compliance box. And I think, as I mentioned before, that the culture of any organisation, whether it be a mining business or a church or a not-for-profit, is set from the leader of that organisation. And so in public companies, that is generally their managing director or the president or the CEO. But above them, in public companies, we have the boards. I fully agree with Dominic that, and to some of Lawrence's comments, I've seen a lot of boards over my career, and I've seen a lot of passenger directors that are quite happy to take their directors' fees and not contribute. But equally, I've seen a lot of very passionate, hard-working directors on boards that do put in, and they're there for the right reasons. Thankfully, and it might seem strange for me to say this, but thankfully our regulators on the biggest stock exchanges in the world have made good governance, I guess, easier and easier for companies to achieve, because if you're not complying with the listing rules on whichever exchange that you're on, then you get chipped or you can no longer exist. And those regulations have gotten tighter and tighter over the years. So on the bigger stock exchanges in the mining world, being the TSX and I guess the New York and AIM and ASX, you will find now that the compliance conditions really forces companies into good compliance. Having said that, in the junior space, in the tiny companies, it's easy to hide poor governance behind facades. And if you've only got retail shareholder bases and larger funds or private equity groups that aren't holding boards and management to account, it's like any organisation. If there's not a good gatekeeper, then you can get away with things. So I think today, as a public company, you just cannot get away without solid ethics, honesty, and a commitment to good compliance with the company. I think that sets the benchmark.
Yeah, part of that foundation, I feel, is that compliance. So before we open the floor for questions, I just have a question I'd like to raise. Perhaps, Trevor, you'd like to answer about greenwashing. It's a risk to business, to investors. It was raised at COP27 as a critical issue. So in your view, how can companies meaningfully demonstrate their ESG performance that provide those positive outcomes and avoid the risk or the reality of greenwashing?
Sure, yeah, thanks. One thing we provide clients is an audit log. So this is an unalterable record of exactly who's entering data and how it's changed in the future. I think I'd be hubristic to say I know exactly how clients will use that audit log in the future, but I think we're all pretty certain in this room that, whether it's banking or finance or insurance, we're going to need to prove that kind of lack of doctoring the data or altering that data governance. Another philosophy we have at Lynx is that data should be ground up. So we'd rather have the geo in the field during that initial interaction while they're engaging with the community, describe that in some sort of database, preferably not in a spreadsheet or a notebook, but keep that log of record. So when it's 5 or 6 years later, maybe you're becoming a developer at that point, you start to understand exactly what that dynamic was like. So I'd say, yeah, transparency through logging things rigorously in an unalterable way, and then also this ground up versus top down kind of approach to data governance.
Thanks. And maybe from the investor point of view, Amanda, have you got a view on that, the issue of greenwashing and how we can try and manage that risk as an industry?
Greenwashing is very difficult. It's a huge issue for all of society. Society has basically said unequivocally, we only really want sustainable businesses, except we haven't really defined what sustainable is. And in fact, I don't think I've opened a website for any company, whether they produce candy or oil or a random widget, that doesn't say that they're a sustainable company. Saying you're sustainable and being sustainable are two very different things. I think in mining, for companies that are in production, there are new standards coming out that I think work. IRMA is a very good standard for a producing mine. It's much harder to judge a company that's in exploration or development. There are some new standards coming out, like Digby, that are specialized in, that recognize the different stages of development and what ESG and sustainability mean for an explorer is very different than what it means for a developer or a company in production. And so you need to be, You need to understand that difference and try and find some standards, but I do think it's an evolving space. One, there's a few things that are becoming ubiquitous. Your carbon footprint is relevant, and where you are on the carbon curve is relevant. Whether you have permits from and demonstrable permits and an ESIA and all of that sort of thing from your local community, whether or not there's been protests. There are some check boxes that are real, and then there's some check boxes that just make no sense. It's still a very common sense approach in the early stages of mining development, I think, and you just have to, there's no easy answer to this question. I think it's evolving and it'll be a better answer over time, but it's still an evolving space.
Thank you for sharing your thoughts on that. I'd like to open the floor to any questions that people may have for our panel this afternoon. Yes, we have one over there. Thank you, Chloe.
My name is Mark Berry from De-Risk Geomining Consultants. Excellent presentation. I think one of the issues that I find in the junior space is that companies exist for different reasons in the juniors. There are those companies who aspire to develop and own and operate their own mines, but there are clearly other companies whose intention is never to get into the development space and own their own operations. They want to build a prospect to a stage where they'll then joint venture or sell. And they just simply want to go through that route. And their ESG, I think, requirements are really rather different. They certainly can't be negative, but their focus on ESG is going to be very different to a company that actually aspires to go into the mining space. I just wanted to get a commentary from the panel about whether they see that in reality or not.
Can I just jump in? I'm sure there's more than one answer to this question, but it's something I see a lot because we invest in this sort of development space. We'll look at guys who have a resource, and it's very clear pretty early on that some guys are just looking to sell it, although that's a bit of a red flag in and of itself. But big warning, whether you want to develop it yourself or whether you want to sell it, you no longer get to ignore ESG, sustainability, social license to operate. There is no major in the world who will buy an asset right now without doing extensive social and environmental due diligence. And if you have created a bad legacy within the community, it is a massive red flag for not investing, because they're going to put hundreds of millions, if not billions, into developing that project. And if you have essentially ruined their social license to operate by not giving a toss, frankly, about what you've done in that local community, they send people to site quietly without telling you, and they ask around the town, every single one of them. And if that comes back negative, you'll suddenly find they've lost interest. So don't think just because you don't intend to build it yourself that your social license to operate doesn't matter, is my personal opinion.
I agree with you. Yeah. No, I completely agree. I think actually we, as an industry, there is a degree of internal self-regulation that is being promoted through exactly as you're saying. And ultimately, to your point, if that attitude prevails, then these projects won't be delivered and people will even further not invest in them. So I think that would be a self-regulatory event that is increasing.
Yeah, I think putting the picture of the school or the water infrastructure you're building on your website is not a sufficient proxy for doing the hard work of measuring this data. And I think we can tell pretty quickly in our conversations with potential partners whether they're serious about getting organized with the data or not. But I will agree that dynamic is real, and I would just encourage any of those that are just thinking about not developing the mine themselves and selling it off. The Newmonts of the world, anybody that's going to buy your mine is going to look at this diligence just as rigorously as if you were doing it yourself. And I think that was Amanda's initial point. So.
Okay, another question?
Hi, Charlie. I'm also from ARC here. But my question is, being that 1 in 1,000 early-stage exploration companies will ever get through to development, how should a explorer kind of set expectations for a project getting underway? And then the other question would also be legacy issues. often going into an area, there have already been explorers who have set a bad conduct in that area. Is there something you can comment on that aspect?
I'll pick up on the first one,
Please do, yeah.
perhaps more than the second. To say so, I've sort of tried to cover that, but to your exact point, it goes back to my thing about, as a promoting CEO with that young company out doing the hard miles, knocking on the doors, getting the money and all the rest of it. Again, just look at what you're saying to those potential investors and think also what you're saying to the community. And it would come back to something we all sort of know, but fundamentally in that junior space, we're promoters. That's why we're there. We're optimists. We believe we wake up every morning, because if you don't wake up every morning optimistic, you're never going to do this thing. But in your relations with your host community and your host environment, because you talk to that as well, and I know this is obvious, just don't overpromise. Like Amanda said, be very clear with what it is you're actually trying to achieve, the pitfalls. Tell them there's a 1 in 1,000 chance. Explain to them, and do not go in at that front end. I hate seeing 450 jobs at the front end of a project. You haven't got a clue. You're 99% likely to create 0 jobs. So just be honest at that stage would be my thing. And just, again, think about what you do when you're promoting and those conversations you have, and then just take that back. And if you looked at your community and said those sort of things, just think how that would impact. So I think that would be my point on the first one.
And then the follow-up question was, in terms of legacies and adopting legacies of previous, I assume you mean poor developers. How can you address that as a risk?
I can take that a little bit. So we have, I think, had some really concrete movement towards good standards for those permanent risks that exist at a legacy site, right? I mean, if you think about it, it's less fluid. The risks are maybe established over the course of the mine site. You have some standards that can help. But there's a lot of really intense work to be done there still, and I think on the exploration side, the standards will still apply. Not every single one, not all 120, but you can be selective and pick 1 or 2 that are going to help you get there, or at least establish that baseline if you're exploring.
I think looking at legacy issues, and they can come into different categories, but for picking up on the point where a project is going to be picked up by a company that wants to operate it, and they're going to send a due diligence team in, the social and environmental risks are treated equally by that team as are the technical risks. And if the damage has been done in the local social community to the point where it hits a red flag or even a fatal flaw in that due diligence team, the project simply won't be picked up and developed. Environmental legacy issues from historic mining are a common issue, particularly in Western countries where acid mine drainage continues to be problems. Thankfully, governments pick up some of the battle there and share that with the incoming operators. I think the biggest issue is that social side, and to pick up on some of the acid tests that people should be looking for when investing in companies, looking for if that damage has been done already. There's 2 things that are needed to get that right at the get-go, no matter which size of company is. And one is dialogue, no matter how tough the dialogue is with people that don't want you there. And secondly, would be the commitment to a trusted and respected relationship from the get-go, and that requires empathy from both sides. So if you're picking up a project with legacy issues where the outgoing explorer has not done those things, had effective dialogue, forced their way onto properties, damaged the environment as they've gone, and not had trusted and respected relationships, it's going to be extremely hard for the incoming company to change those attitudes. They'll be generational, those attitudes. And I've worked in many Western countries, but also many third world countries. But that issue would ring true in both cases, whether you're talking with modern agricultural farmers in Australia or villages in the highlands of Papua New Guinea where I've worked, or in Madagascar where I've worked. The same issues. If you've damaged those relationships, it's a human thing. They're hard to rectify.
Thanks. I think we're just going to try and squeeze the very last question in from, yeah?
Steve Cathy, Metsi Engineering, South Africa. My view is that the local government should get involved with ESG financially as well, really my view. I'd just like to hear the view from the panel.
I mean, I can jump in quickly there. You're right, they probably should. Whether or not they're funded or capable of doing that, other than potentially being a liaison to the community, it's one of those things that it would be great if that was the case, but I'm not sure it'll ever happen realistically. Sorry.
I would agree. I think it's a stretch to expect the local communities to contribute financially to it, but certainly there should be coordination. But it's up to the company to establish that relationship and work with them to create that liaison.
And to a specific one, just to bring in yet another acronym in, one of the things there is the Extractive Industries Transparency Initiative. I don't know if you're aware of that. But that is an initiative where host governments of mining operations then commit to a transparent reporting of where funding from the mining operation goes. It's not quite to your point, but it's in that sort of same direction. And I think actually, whilst I'll admit to being terrified by the millions of things out there, EITI is one of the ones that we do support, and we're talking to government about that, because we see the value in actually having that transparent reporting of where our concession and royalty fees go, which I think is sort of where you were heading. Didn't answer your question, but it was sort of in that right direction.
Just really quick, I think we've had some success with public-private partnerships in other sectors, and we don't really hear about it talked much in mining. Maybe that's a good panel discussion for next year or something like that.
Great. Well, thank you for your questions, and please join me in thanking the panel for sharing their fantastic experience and insights today.
Thank you.